Hi, I'm Trey Booth, and I'm here to talk about the impact of dividends and distributions on your portfolio. And how I want to illustrate that is using the S&P 500 index return since 2001. So, on January of 2001, the S&P 500 was trading at 1,320. Today, or actually June 30th of this year, it shot up all the way to $2,423. Now, what does that mean for money? If you'd invested $1 million in January 2001, that $1 million would be worth $1.8 million, annualized a little over 3.7%. That's not bad. It's a lot better than you could have gotten putting that under the mattress. However, if you had taken the dividends that are paid by the market each quarter and reinvested them, that 1.8 would actually be worth $2.5 million, or an annualized rate of return of 5.8%. That is an enormous jump in price just by taking those small dividends and reinvesting them. So let's say you knew the future in January 2001, and you had $1 million, and you knew the return would be 5.8%, and you took out $58,000 every year out of that $1 million. You would think that taking $58,000 would cause your portfolio to be flat, and you'd end at $1 million. Instead, by taking out $58,000, you don't have $1 million at the end of the time period. You actually have $474,000, over a $2 million difference from the dividend reinvesting strategy. Now, why is that? How could $928,000 worth of distributions hurt your portfolio by over $2 million? The reason is because the market doesn't go up in a straight line. It goes up, it comes down, then goes up, then comes down, then goes up, and gets to this end point through a very rocky period. And if you're taking out $58,000, that's 5.8% of $1 million, but that's much more if you take it out down here at the bottom, and much less if you take it out here at the top. So how those distributions and the timing of those distributions have a huge impact on how your portfolio can grow. Even knowing the future, you really can't know how the market will turn out and how your portfolio will end up. I think that's an extremely important point when you're thinking about the growth of your portfolio and how long your assets can last. It's not just what has the market done in price, it's how it got there and then what you did with those returns. I hope this has been very informative. This has been another Investor's Insights from Five Plan Partners.